Hi, I'm Kristen King from the Investing Channel, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. Equity markets have retreated from their all-time highs as the mood in the market moves from hopeful optimism to one of caution and concern. The change in sentiment has been driven by worries about the pace and timing of a reduction in asset purchases by the U.S. Federal Reserve, with some market watchers now wondering if that could come as soon as the central bank's September meeting. Insider trading tends to follow a cycle that's independent of swings in the underlying market. However, it can influence investor sentiment about the wider markets, particularly when dealing screens are full of flashing red numbers. For now, U.S. markets have lost just single-digit percentages and remain well onside over the year to date. However, the wall of insider selling that we have been highlighting over recent weeks is likely to be chipping away at investor confidence, if only subconsciously. Sentiment around growth stocks is likely to be the most vulnerable, not least because they are expected to be hardest hit as, when, and if the Fed make changes to its monetary policy. In recent episodes, we have highlighted significant share sales by insiders at a number of highly rated growth companies, and more deals have come across the tape this week. One that stands out is a sale of Coinbase Inc. by a living legend of venture capital investing, Marc Andressen. A former software engineer turned investor, he was the creator of the world's first widely used internet browser, a co-founder of Netscape, and a founding partner in one of Silicon Valley's best-known money managers, Andreessen Horowitz, a firm who have backed and funded many of today's tech giants, including Facebook, Foursquare, GitHub, Pinterest, LinkedIn, and Twitter. Andreessen joined the board of Coinbase in August 2020 as the cryptocurrency exchange sought to beef up its corporate governance ahead of the direct listing that would turn it into a public company. However, Andreessen Horowitz had invested in Coinbase as long ago as 2013 by leading a $25 million funding round. Coinbase Inc. listed in April this year with a market cap of around $85 billion and providing the venture cap firm with one of its biggest successes to date. However, that valuation has fallen significantly over the last 4 months, with the stock down around $80 from its first day closing level, and Coinbase's market cap has shrunk to $50 billion as a result. Marc Andreessen is seen as something of a cheerleader for cryptocurrencies and blockchain technology, so the fact that he has chosen to sell just over 726,000 shares of Coinbase at $259.60 for a total of $188.59 million seems significant. After all, he is among the shrewdest tech investors on the planet and has watched Coinbase develop and grow as a business over the last 8 years. Could the recent divergence between the Coinbase stock price and the prices of leading cryptocurrencies, such as Bitcoin and Ethereum, have influenced his decision to divest? After all, during the last month, Ethereum, in green on the chart, has rallied by 71.14%, and Bitcoin, drawn in red, is up by 53.65%, whilst Coinbase stock, in black, has gained just 9.09%. Growing regulatory scrutiny and the possibility that U.S.-based crypto exchanges will be forced to inform the IRS about every transfer or trade that takes place on an exchange have no doubt weighed on Coinbase's performance, and they are likely to continue to do so. As we have noted before, there can be no criticism leveled at an early-stage investor who takes a profit on that investment, having carried the risk of holding an unlisted security for many years previously. However, when someone that has a reputation that precedes them and who is so intimately acquainted with a business and the space that it operates in is selling down their holdings, it's very tempting to, if not unavoidable to, treat it as a line being drawn in the sand. That's all we have time for today. Always make sure you do your own due diligence before making any investment decisions.